shorting a stock, guys, is a very risky bet because what you're saying is, I bet that this stock is going to go down. We know historically, looking at the market, that this has been a bad strategy for the long term because no matter what we go through in the world, the stock market eventually recovers. Yes, there are periods of time when stocks crash. Yes, there are periods of time when short sellers make millions. However, unless you have your crystal ball available to you, it's impossible to predict consistently. And well, today we're going to be discussing what short sellers in Nio Stock experienced, and they learned the hard way here on why you shouldn't necessarily short a stock, especially one that has incredible momentum behind it. So in this video, I want to discuss the following. First off, how much money did these short sellers in Nio actually lose? Secondly, what is the short interest on Nio today, and what does that really tell us? And then finally, how can we as regular retail investors take advantage of these short sellers? Guys, drop a like down below to help out the channel, and make sure to watch the entire video because I'll be going through some stuff you may not understand with the whole short selling side, but once you're through this video, you'll have a much better understanding of how this works and how you can actually take advantage of this. So let's get this out of the way. How much money did short sellers lose in Nio? Reports state that short sellers in Nio stock lost around $2.66 billion so far this year, and they're on track to losing $3 billion if the rally in Nio stock continues. On November 3rd, just one single day, they lost $155 million, and this is a very real risk when you're shorting a stock. Guys, this is a big deal because it's not like, some regular investors like you and I putting a few $1,000s, maybe a couple hundred, maybe even a couple $1 million in the market and saying, I bet the stock is going to go down. These are some experienced investors because there's billions of dollars on the line, and you and I don't have access to that kind of capital. So it's definitely some large hedge funds, investors, short firms. A lot of big money is making bets on stocks like Nio that they're going to go down. Now, I'm sure regular retail investors have also lost a ton of money here shorting Nio stock, and honestly, I feel for them. But all I can really hope is that if you shorted Nio stock, you learned a lesson out of that on why shorting stocks is extremely risky and honestly should be avoided for most people. I think the best examples of short sellers getting burned is when we saw Tesla shorts get absolutely demolished earlier this year. In August, shorts in Tesla lost more than $25 billion. That is bigger than the market cap of some very well-known companies out there. So guys, this is no joke. So all I really want to get across to you with this point here is that short selling is dangerous. Short selling is risky. Many people, experienced professionals, lose billions of dollars short selling. So if you do plan to dabble in this field of investing, just be prepared for that and just know that you may become part of that stat that loses out a ton of their capital. But there is something out there which I want to discuss with you in a couple minutes here, which will go over how you and I can actually take advantage of short sellers, look at information out there that kind of gives us an idea of, how many people are shorting the stock and what hints that gives us for the future of the stock price. So anyways, you definitely want to stick around to the end of the video for that, but let's move on here. So here, number 2, what is the short interest on Nio today? So guys, check this out, okay? So this is Pfizer, it's been in the news a lot lately, so I thought I'd throw this up here. Looking at this example here, we can see within the last year, Pfizer has seen their short volume interest around 15 to 20% on average, meaning that on any given day, this is how many shares are short on Pfizer, meaning that this percentage of the shares traded are betting that the stock is going to go lower. Now, this is the graph showing Nio's short volume interest for the last year. And we can see that in general, Nio is a much more shorted stock with levels above 30% in recent weeks. The most recent stat shows that this has dropped now under 30% again. It's not reflected on the chart yet, but we're still sitting relatively high here with short interest in Nio. So what this tells me is that there's still a lot of people out there that are betting against Nio, and they're betting that Nio stock is going to go down in the near future. Remember, typically when you short sell stocks, you're not looking long term for the stock to go down, because like we know, history tells us over the long term, a good company will actually go up over time. However, there are periods of time when, stocks get overvalued, valuations are just stretched and don't make sense, and that's when short sellers just flood in, and that may be what we're seeing with Nio right now. But hey, so far these short sellers have been completely wrong, and it's actually helped us have an incredible rally here in Nio Stock. So maybe we see billions of dollars more being lost in Nio, only time will tell. You have to understand though, if you're a Nio bull and you're a long-term investor in Nio, this kind of stuff doesn't really matter because it could actually provide some buying opportunities for you where the stock dips for a bit. However, you have to understand that there's always going to be a segment of investors that are against your investments. Now, depending on who it is that's against you, it could either become a big deal or it could be something small that the market just shrugs off. We've seen situations like with Tesla where short sellers can actually drive the prices down to ridiculously low levels. Remember Tesla at like 180 about a year ago when short sellers were all over it? Yeah, so that's what short sellers can do if they really want to take hold of a stock. So just be prepared for that. But if you're smart, you understand the business, you understand the fundamentals, see the outlook for the company, those are definitely buying opportunities. It's unfortunate, but a lot of regular investors will fall trapped to these short sellers and will sell out at the first sign of any red in Nio stock. That's just the reality of the situation. But guys, I want you to be smarter than that. I want you to actually see it for what it is, see the big picture, realize, yeah, Nio's had a great run so far this year. It's quite likely we see a pullback here, especially with all these shorts trying to pull it down. But if that happens, hey, maybe it's a buying opportunity. So this brings us to number 3, how can we actually take advantage of these shorts? So now, while these short sellers may seem scary because they're literally betting against you if you're long on a stock, there's actually things we can do to take advantage of the situation. When you see a good company out there having their stock shorted heavily, that is typically a big opportunity and should be something to consider. Tesla is a perfect example of this. This is their short volume interest chart, and we can see that when shorts were in control, yes, we saw short-term selling in Tesla. But what happened right after? Buyers stepped into the stock, they saw these suppressed prices, and they pushed the stock back up to their old highs and well past those highs, setting records for Tesla stock. Also, when Tesla released positive news, these short sellers panic and sell their positions, which in turn leads to more buying pressure, and the end result is higher stock prices. So here's how we can actually take advantage of these short sellers in Nio. We know that there's a few catalysts coming up here in Nio. The earnings is in about a few days now. And we know that short sellers are going to be betting big that Nio's either going to disappoint on these earnings or they're just going to come in line, which will not necessarily push the stock price higher, in my opinion. So the smart thing to do would be to have some cash ready to deploy if the stock price goes down after earnings. We know that the short interest in Nio is extremely high, so if there's bad news, the stock can see a massive drop. So be ready for like a 10-20% drop in a single day in Nio stock if there's any bad news. But that's kind of the reality of the situation with these high risk stocks. It just comes with the package. But if you're smart and you have your capital ready, you can actually average down your position, get a lower cost on Nio, and then over the long term, if you see this business succeeding, you will thank yourself for having thick skin, for having nerves of steel, and buying into a falling stock. And this goes for any stock, not just Nio, right? If you find a good business that you believe in, the fundamentals are strong, the outlook looks strong, but the stock is heavily shorted, typically a good buying opportunity. And when the stock price dips, all those short sellers start covering, they start taking their profits, and then guess what? Buyers are in control again, and that's what pushes the stock price back higher. So the key is to always have cash ready, because when those opportunities come, you don't want to miss, you don't want to panic, you want to have a plan in place and deploy that capital in. I typically don't spend too much time looking at short interest in stocks, but with high risk stocks like Nio, it's always a good idea to understand what percentage of investors are betting against you so that you know how drastic a sell-off can be in the stock with any bad news that comes out. I want to reiterate this point to you that Nio is high risk. Nio could definitely see a big sell-off, but that does not mean that it's a bad company. It does not mean that that's the end of the stock. It just means that, hey, this is a buying opportunity if the long term still looks strong. But I do want to say this is not a foolproof strategy. This does not mean that every time there's a high short interest that a stock is a good buy as soon as it dips or something like that. Because there's many stocks out there that deserve a high short interest because they're either headed lower or they're even headed for bankruptcy, which, short sellers are hoping for. But if it's a business that I want to own, if it's a business that I believe in, I welcome these dips in the market. I'm actually hoping that I wake up in the morning and my stocks are down 10-20% because that means I can deploy a lot more capital in there and lower my cost basis on these stocks, and over the long term benefit even more from the stocks. Think of it this way, if Nio Stock goes from $40 to $80, that's a double up. But if Nio Stock drops down to 20 and you buy in there, it goes from 20 to 80, that is going to multiply your investment by 4 times. So just keep that in mind. Think of it that way and you will actually start enjoying days that's red in the market, that stocks are down massively. So guys, whether you're a bull or a bear on Nio, all I ask, smash that like button first of all, but just be careful here. Earnings are coming, they're very close, and that means that volatility is going to pick up in this stock, and that means that we could see a lot of selling in this stock. I don't want to see any of you panic sell out of fear. I want you to be calculated. You still have a few days to figure out what your game plan is before earnings, so do that. Spend the time to actually understand, hey, if this scenario plays out, what would I do? If this scenario plays out, what would I do? Have a game plan. That's kind of the key to investing. And if you have that, you could care less what happens on earnings day because you can take advantage either way. Anyways, guys, hope you enjoyed this video. Thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.